wishing you all a very happy new year. It's an absolute pleasure to speak with you today. Last year, we witnessed some very unprecedented times, and now, with improved vaccine prospects, we are filled with optimism for 2021. And we are very hopeful that it will be a better year for the society, for the businesses, our clients, and for us. I'm also quite happy to share with you that effective January 1st of the new year, we have gone live with our new organization structure. Let me now give you an update on our Q3 performance. I must say I'm pleased to share with you that we have had a second consecutive quarter of strong performance with healthy growth in revenue, acceleration in order booking, expansion of margins, a sustained lower employee turnover, and solid operating cash flow. The revenue growth of 3.9% in reported terms and 3.4% on constant currency terms is at the upper end of our guidance. Our growth was the highest in 36 quarters. The growth in revenues was broad-based across sectors and markets and led by a surge in volumes. We expanded our operating margins during the quarter by 240 basis points to 21.7%. This, again, is the highest we have achieved in the last 22 quarters. The expansion was led by driving excellence in operations and focusing on improving the quality of our revenues. Several operating metrics are at our all-time best, including offshore mix, utilization, attrition, and optimized subcontracting. Our overall order booking for the quarter grew also double-digit on a year-on-year basis. The order book was strong across sectors and service offerings, and had a good mix of both large and small deals. We closed 12 deals with over $30 million TCV, and the TCV booked of these deals was over $1.2 billion. We also closed our largest deal ever in continental Europe with Metronome. All of this was achieved while implementing the biggest transformation that the organization has seen in recent years. To me, it's a testimony to the steadfast execution capabilities and a committed One Wipro team that we have in place, whose relentless efforts are paying off. Now, let me provide some color on the underlying business performance. There is significant traction in markets across all our key geographies. We saw good order booking across major geographies in US. The growth funnel was very healthy, and the order booking grew double-digit year-on-year. We have consistently converted some of the large deals in Europe, which has resulted in Europe growing faster on a year-on-year basis at 1.4% in constant currency terms. We see demand in Europe being particularly strong, driven by acceleration in adoption of cloud, digital transformation, and driving efficiencies in the core, leading to optimized costs. Now, from a sector view, I'm pleased to report that we had all cylinders firing. 5 out of 7 sectors grew over 4% sequentially. Consumer sector continues to trailblaze on the back of solid deal wins. Growth in financial services is driven by demand across all subverticals, led by demand in digital operations, in cloud infrastructure services, and digital transformation. The momentum in energy and utilities was led by utilities. However, we are beginning to see a ramp up in demand in oil and gas customers, and encouraged by the deal wins we had. Technology bounced back this quarter with a healthy growth despite the furloughs. Communications and manufacturing continued to build on the momentum. Healthcare and life sciences performance was aided by a seasonal uptick in our health plan services business. Now, let me give you some example of some of our wins in digital operations and cloud infrastructure services space. Wipro has won a multi-year, multi-million-dollar engagement from a US-based mortgage lender to provide customer service to the lender's rapidly growing retail mortgage client base. Wipro will leverage its best-in-class mortgage centers in the US and in India, business operation services and application development to power the customer's aggressive growth strategy. Another example, a US-based multinational food manufacturing company has awarded Wipro a strategic multi-year global managed services contract for cloud and infrastructure, service desk, and IT service management. As part of this engagement, Wipro will also provide end-to-end infrastructure services, including multilingual service, site support, workplace optimization, cloud on AWS, cross-functional coordination and tools, ServiceNow, Science Logic in particular. In addition, Wipro will consolidate all infrastructure projects globally. The clients are definitely embracing the transformation of their IT estate and are moving away from traditional IT models and adopting business technology operations model and shifting the discussion to overall TCO. Second, our clients are investing significantly on digital business solutions. Customer experience transformation programs are becoming front-to-back initiatives, including core transformation, and not just on an omni-channel experience. Third, clients are moving beyond the lift and shift of the workloads to the cloud to exploit the automation and native capabilities, and we are helping them link this directly to business goals. Partnership with our strategic alliances to create joint solutions are leading to wins where we are helping clients transform their IT and create business solutions. Let me give you a few examples. With Metro AG, a leading global wholesale food company, we have signed a 5-year and 700 million with the intention to extend up to 4 additional years for a potential spend of $1 billion. Strategic digital and IT partnership with Metro. Wipro will deliver a complete technology, engineering, and solutions transformation program for Metro as it positions itself as a wholesale 360-degree provider in the trading, cash and carry, hotel, restaurant, and catering food industry. Wipro's transformation program will encompass cloud, data center services, workplace, and network services, along with application development and operations to provide an integrated, flexible, and robust digital infrastructure. Partnering with Wipro allows Metro AG to simplify and streamline their IT landscape, and critically gives them access to innovation and the best digital practices. Another example, we have been chosen as the transformation partner for a bank in the UK to reimagine their customer journey and transform to be more a digital relationship bank delivered with cloud-first architecture. Our cloud studio continues to build and leverage industry and horizontal patterns, enabling us to deliver business outcomes rapidly. Another example, for a leading healthcare provider, we have leveraged AWS containerized solution to deliver complex data application in 4 months to meet their year-end regulatory requirement. Now, on our outlook for Q4 21, we have guided for a revenue growth 1.5 to 3.5%, which reflects the current demand environment and considers that we will deliver this in our new and improved operating model. The last 90 days have been very busy for us as an organization, but the good news is that we are moving in the right direction. The team is in place, and our focus now is only on growth and on accelerating the momentum. In our Analyst Day commentary, we had said that we see margins sustainable in medium term. As you have observed, we have delivered significant margin expansion in Q3. Growth remains our top priority. We have begun to make investments in our frontline sales and domain specialists. For 80% of our employees, we completed the promotion cycle effective December 1st, and we will also be rolling out salary increases for them effective January 1st. We have also announced a 100% variable payout for Q3 and Q4, which will make it three consecutive quarters of full payouts. Our margins for Q4 will have headwinds of these investments, but will still remain elevated. To summarize, I'm very excited by the acceleration in business momentum we have seen this quarter and optimistic about the year ahead of us. With that, I hand it over to Jatin for his comments on the financial performance for Q3 21. Jatin, over to you.
Thanks a lot, Thierry. And ladies and gentlemen, thank you very much for joining us. Very good quarter, excellent quarter in terms of execution on all parameters. Let me talk some of them. Revenue, as you know, we have come at very close to our upper end of the guidance at 3.4% in constant currency. We expanded operating margin to 21.7%. And as a result, our operating profit grew 24% year on year. Our ETR was slightly higher this year compared to last year. Last year, it was around 20%. This year is about 22.1%. So therefore, net profit growth was 20.8% and EPS growth was 20.7%. Overall, we are quite pleased with the way from revenue to profit, the whole execution translated into performance in terms of financial parameters. Let me talk about cash. An excellent quarter on cash also. We improved our DSO by 6 days. Our operating cash flow was 106% of EBITDA. Our free cash flow was 133% of net income. At the end of quarter 3, we had $6.2 billion of gross cash, and we had net of that cash of $5.2 billion. Our forex realization was at 74.04. We had $2.7 billion of hedges at the end of quarter 3. Overall, forex gave us an upward movement in margin by 0.3% in quarter 3. We are working on completing our buyback program, as all of you know. It will get most likely completed by January end. And the board of directors have recommended an interim dividend on 1 rupee per share. With that, we'll be very happy to take your questions. Thank you.
Thank you. I request Mugdha to unmute yourself and proceed.
Mugdha, you're on mute.
Hi, sorry. Can you hear me now?
Yeah,
Yes.
we can hear you. Yeah.
All right. Congratulations on a very strong quarter. Thierry, I want to start with you first. You did mention that the new organizational structure came into effect starting this month, starting Jan 1st of 2021. How has the transition been so far in the last 13 days? You also talked about lowering dependence on the US market and increasing focus on other markets, like Europe and Asia. If you can highlight over the last couple of weeks how that has played out, and when will Wipro get back to industry level growth? Will this organizational change really accelerate that for Wipro? Jatin, I wanted to ask you about of course the margins. Definitely a big jump in margins, 230 BPS. What is the impact on margins that you see from this structural reorganization? Have you accounted for what it will be in this in this quarter, now that it's come to effect in January? And also I wanted to ask you about what the digital revenue growth has been, because Thierry had in the analyst call pointed out that digital technologies will grow at 15 to 20% in the next 5 years. What has the digital revenue growth been in Q3? And Saurabh, coming to you, in this whole organizational rehaul, Thierry has talked about how there will be a new CTO, a chief growth officer, a new chief revenue officer. What is the status on those? Have they been appointed yet? Attrition is at 11% on par with Q3, but given the organizational shift, do you expect this to impact attrition? Do you see that attrition could go up because of the structural changes?
Okay, so thanks a lot for all these questions. I will try to take the first three and make sure that I don't forget any, and then I think we'll pass it to Jatin, and then Saurabh will end. But I will possibly respond to a fourth one as well. So the first question is clearly on the transition itself. We have engaged the leadership in the work, in the thinking, in the design of the operating model early enough that, when we decided to start the transition, basically mid of October, the teams were already quite clear about, how to progress, what to do, while keeping an absolute focus on the market. And I must say that, by the time we are actually officially shifting our organization to the new model on January 1st, most of our teams are already in place and organized to really drive their business in the new model, because the transition had started before. So at this point in time, I would say, like in every organizational evolutions, you have a certain time, you need a certain time to adjust, and that's what we call transition. But from my standpoint, the transition that we are driving is very smooth. And the feedback we've got from our employees, looking at the surveys we've run, has been extremely encouraging as well. So, I don't expect much disruption from that standpoint. The focus on the market remains the same, if not more intensive than ever. On your point on the geographical focus, we've never said that we would focus less on the US market. US is the #1 market of our business and will continue to be. And in fact, 2 of our strategic market units, or 2 of our 4 P&Ls, are focusing on this market. So absolute focus on the US market, but and on the whole Americas market. But besides these markets that are so important, we are also energizing the focus, if you like, and increasing the focus on our European and Asia Pacific and Middle East markets. And here I would say we have new teams in place, very excited, very mobilized, obviously leveraging the strong relationship we have in these markets, but also investing in market expertise, investing in capabilities, investing in talent, in each of these geographies. So this is also, looking good and, will produce results rapidly. Your third question was on when will we be catching up with the competition in terms of growth. So let me start with one thing. The roadmap we've designed for ourselves is focusing on our own priority. We are driving the trajectory for WIPRO for the next years. And this is what's driving us. We do not want to be constantly comparing with competitors. Having said that, we are very aware of the fact that, for years we have grown less than most. And as, I have had the opportunity to say several times, one is we are restoring growth, which was in Q2. Then we are accelerating. That's the work for the next quarters. And then there will be a point in time we will reach the point of growth of our competitors, and we will go over and beat the competition in growth. That's the trajectory. Bear with us. We do not want to over-promise, but we will certainly keep you updated on the perspective on growth quarter over quarters. With that, Jatin, over to you.
Sure. We said at the time of analyst meet that we do see benefit of moving two things. One is moving from 3 axis to 2 axis, and that frees up resources, that frees up duplication, and that we should be able to reinvest back. Second thing, we said that we will remain very focused in our investment, and we will not spread and hope for success, but we will really remain very strategic, very determined where we are investing the dollars. And as you know, we have moved to the new model from 1st January. So it is too early to say that we have fully realized the benefit of these two strategies, and they will play out over next few quarters. And Thierry mentioned that investment will remain our focus for growth. So one is definitely not expecting a cost saving out of that, but really far more effective investment that we can deploy to grow faster, and that's the real point of view that we have moved on. On digital, as you know, we have taken a view that we will reassess because the context has changed. What we used to publish as digital before last year and what were the client priorities has certainly changed between last year and now. We will come back to you with a measurement of new from Q4 standpoint, Q1 standpoint. But let me give you some indication of success that we have seen, and it's very heartening. The first is cloud, which has grown 23% for the company. Second is cybersecurity, which has grown on Q3 30% YOY for the company. There are specific services within ambit of larger digital, such as data practice, and we classify all those services separately within our digital services. That has grown 4% plus sequentially Q2 to Q3, which is ahead of company growth rate. So there are many strong individual performances, and we expect that we should be able to carve out a number that is representative of strength of each of these service lines performance and share with you from Q4 standpoint. Saurabh.
Thanks, Jatin. So Mugdha, you asked 2 questions. Thierry had called out in the analyst meet the number of senior hires which we'll be doing. Few of them as Thierry's direct reports, and a number of them in second line. I can only tell you that there have been intense activity over the last few months to hire these people, and you would hear and see them as we move during this quarter and going ahead. All these senior leadership would be getting inducted. So as part of the reorg, where it has not only we have some of our leaders have moved on, there's a lot of new talent getting inducted into the organization, and you'll hear about them as they come on board. The second question which was asked about was on attrition. So as we have been on a flat attrition quarter on quarter, but as the market is buoyant, the industry is buoyant, we have seen high hiring activity across the industry, even for us and for others. We have seen a gross hiring of 14,000 for us, which is a record. Very clearly, I see that we will be under pressure on attrition in the coming quarters. We have taken action, as Thierry called out, either by giving salary increases or 100% variable pay or promotions to our people. But there is a war for talent, and we will be working very actively to ensure that this does not impact us in a growth trajectory. There will be no supply side constraints, and we will continue to make sure that we have enough people required to manage the growth momentum.